If you're looking for 3 solid companies to hold in your portfolio for 2021, whether you're a beginner to investing or you've been in the game for a while, I've got 3 solid companies for you to look out for. What's going on, guys, and welcome back to the channel. If you're new around here, my name is Jason, and around here you'll find videos on personal finance, investing, and just money related topics. So if you're interested in any of those things, be sure to go ahead and join the family on this YouTube channel and go ahead and subscribe at the bottom there. Also, if you're excited for today's video, make sure you drop a like so I know to make more videos just like today's. And just a quick disclaimer, I am not a financial advisor, nor is this financial advice. Whenever you're investing into anything, always do your own research and consult a professional. With that being said, let's jump right into today's video. The first company that we're going to take a look at here is called Shopify. And the ticker symbol on Shopify is SHOP. And Shopify is known to be a commerce company which provides cloud-based multi-channel commerce platform for small and medium-sized businesses in Canada, the US, the UK, Australia, and internationally. And the Shopify platform provides merchants with a single view of business and customers in a various sales channel, including web and mobile storefronts, physical retail locations, social media storefronts, and marketplaces. And currently, at the time of recording this video, Shopify currently trades at $1,148 per share. And over the last year, Shopify is up almost 133%. And over the past 5 years, Shopify is up over 4,600%. Now that's some crazy growth. Currently, Shopify has a forward EPS of 3.70 and a forward PE of 297.27. Shopify's market cap is sitting at almost $135 billion. And if you take a look at the earnings for Shopify, you can see here for the last 4 quarters, they've been easily beating their expectations. And on February 17th, they'll be releasing their Q4 2020 results. And so far, these will be looking good as well. And looking at the recommended rating by analysts for Shopify, currently it's sitting at a 2.4, which is the buy. And currently the analyst price targets for Shopify is sitting at $1,160 per share. And if we pull up Shopify's income statement, you can see here their revenues have exploded. Just by comparing December of 2019, you can see their trailing 12-month period. Currently, they're sitting at a little over $2.4 billion in revenue. Now that's pretty insane. And also looking at the gross profits, those have also shot up insanely, where they're currently sitting at $1.3 billion in gross profit. And if we look at their operating expenses and income, you can see they are spending a good amount of money in research and development, which is really good to have on Shopify's part because they're testing out a lot of different things that can potentially make them even skyrocket more. And also, if you take a look at Shopify's net income, you can see here they've been constantly losing money, but over the trailing 12 months, they've finally got into a positive, and I just see this company becoming bigger and bigger in terms of their net income as more and more people jump onto the Shopify platform and open their businesses and use all of their tools that they've given in order for your business to succeed on their platform. And pulling up Shopify's balance sheet and taking a look at their cash and equivalents, you can see they have a ton of cash laying around, almost $3.1 billion, and they can use that to pay any type of debt off. And if they need to, they can easily pay off their debt, or they can put that money back into the business and just grow it further with research and development and other things that they can use. And Shopify's next quarter results will be releasing very soon on February 17th, right before the market opens. But you can see that their EPS estimate will be $1.23, and their estimated revenue will be sitting at $906 million. And here you can see on this chart, not only did they beat, like I mentioned, every single quarter in the last 4 quarters, but their Q4 year over year is expected to be up 185%, which is pretty insane to see. And here's why I think having Shopify within your portfolio is a very good thing long term. Like I mentioned before, everything is moving online, and it's become so easy for consumers to purchase pretty much anything that they want online in the comfort of their own home and have it delivered to them. And Shopify excels in that very well, because Shopify is just a one-stop solution for any type of business that's online. And Shopify's platform is so easy and very user-friendly that it's used in over 1 million businesses in 175 countries around the globe. And as we saw with the pandemic that started last year in March, everything was pushed to be online. And I have no doubt in Shopify that in 2021 and many years years to come that they won't stop growing. Next up on the list is a merchant giant called Visa, and the ticker symbol on this is V. And at the time of recording this video, currently Visa trades at $198 per share. And as we all know, Visa operates as a payment technology company that's worldwide, and they're found literally everywhere. And they facilitate digital payments among consumers, merchants, financial institutions, businesses, strategic partners, and government entities. And they operate VisaNet, which is a transaction processing network that enables authorization, clearing, and settlement of payment transactions. And recently, Visa did release their earnings report, which I'll be covering in a few seconds here. But if you take a look at their 1-year chart, you can see Visa is down almost 6%, which in my opinion, I think it's a great buying opportunity because this stock has been over $200 per share for a while now. But over the past 5 years, Visa has grown about 160%. And if you really want to get crazy, pull up their 10-year chart and they've grown over 1,000%. Recently, I also ended up picking up some Visa shares to add to my portfolio because I've been wanting this company to be a part of my portfolio for a while now. Visa currently has a forward EPS of 5.48 and a forward PE of 35.29. And another great benefit of having Visa part of your portfolio is that they pay a dividend. Now, it's nothing crazy, but hey, having Visa in your portfolio and that added benefit of a dividend, why not? Currently, they pay a dividend of 0.66%, which equals out to about $1.28. Visa's current market cap is sitting at almost $452 billion. And because Visa pays a dividend, taking a look at Visa's dividend summary, their payout ratio currently is sitting at 23.37%, which is really good because it gives them a ton of room to grow their dividends over time. And in the past 5 years, their dividend growth rate has been 19.53%, and they've been consistently growing their dividends for the last 12 years. And in the next year, Visa is estimated to grow about 25.9%, and over the next 5 years, they're expected to grow 13.84% per year. Looking at the recommended analyst rating for Visa, they're giving it a 1.8, which is a strong buy, because if you take a look at the average analyst price target, it's sitting at $240 per share, where currently they're at $198 per share. So that just means it gives Visa a ton of room to grow. Now, to summarize Visa's latest earnings report, they had an EPS of $1.42, which actually beat expectations by 14 cents. Also, they had revenues of $5.7 billion, which is actually down about 6% year over year. But as per the analysts, Visa did beat their expectations by about $180 million. And if you take a look at Visa's trailing 12-month revenues, they are slightly down from September of 2020, but despite being in the weird situation that we're all in currently, still Visa has managed to get revenues of almost $21.5 billion, which is pretty insane to think because of the times that we're in right now. And Visa's gross profit is slightly down as well, sitting at $20.7 billion compared to September of 2020. And looking at Visa's net income, it is also slightly down, coming in at $10.7 billion compared to the $10.8 billion back in September of 2020. And if we switch over to Visa's balance sheet and look at their cash and equivalents, they've got enough cash and short-term investments to cover them for whatever that may come up in the short term. And if you take a look at the total net revenues of Visa in their 2020 annual report, you can see the breakdown of where everything is coming from. So they've got service revenues of about $9.8 billion, their data processing revenues of $11 billion, which is actually the highest. They've also got international transaction revenues of $6.3 billion. They've got other revenues, which consist mainly of value-added services, license fees for use of Visa brand or technology, fees for account holder services, certification, licensing, and product enhancements. And that comes in at $1.4 billion. And then they've got client incentives sitting at $6.7 billion, which is obviously paid to financial institutions, merchants, and strategic partners to build payments volume, increase Visa product acceptance, win merchant routing transactions over their network, and drive innovation. And the reason why I'm super excited to have Visa in my portfolio, not only do I know that this company is going to be around for a very long time, and that they're also going to be innovating over the times as times change, but they have this service that's called the Visa Token Service, and it generated an estimated $1 trillion in e-commerce sales in just over 5 years after its launch. Tokenization helps to protect the user's payment data and is seen as a growth driver. And also, Visa acquired several small tech companies offering tools for tokenization and dispute resolution. But here's why I'm very excited with Visa. They're putting their foot into cryptocurrencies. Visa reports onboarding more than 25 companies companies, on December 2nd, Visa and cryptocurrency financial tech company BlockFi partnered to release the Bitcoin Rewards credit card to US residents. And this card will be issued in the spring of 2021 by Evolve Bank and Trust. And last but not least, the next company that we have on the list is called NextEra Energy. Ticker symbol on this is NEP. And at the time of recording this video, NextEra is currently trading at $83 per share. And this company owns and manages contracted clean energy products in the US. NextEra Energy owns a portfolio of contracted renewable generation assets consisting of wind and solar projects, as well as contracted natural gas pipeline assets. And if we go ahead and pull up NextEra's 1-year chart, you can see here they're up about 46% over the year. And if we take a step back and take a look at NextEra's 5-year chart, you see that they're up almost over 202%. And currently the recommended rating by analysts for NextEra Energy is sitting at 2.1, which is a buy, and they have an average analyst price target of $83.16 per share, where currently they're sitting at $83.04 per share. And NextEra Energy currently has a forward EPS of 2.08 with a forward PE of 39.25. And just like Visa, NextEra Energy also pays a dividend, which is higher and a little better than Visa. Currently, they're paying 3.02%, which equals out to $2.46. And pulling up the dividend summary, NextEra Energy does have quite a bit of a high payout ratio, sitting at 118.48%, but their 5-year growth rate on their dividend is 20.11%, and they've been consistently growing their dividends for the last 6 years. And in the next year, NextEra Energy growth estimates are about 15%, and over the next 5 years, their growth estimates are to be 41.9% per year. And just like Visa, NextEra Energy also recently released their latest quarter earnings, where they had an EPS of 85 cents, and it actually beat analyst predictions by 42 cents. But they did miss on their revenue, as their actual revenue was $212 million, and they missed that by about $141 million. And looking at NextEra Energy's net income, and they produced a net income of $64 million, and comparing that to back in September of 2020, where it was sitting at $57 million. Now, the only thing that kind of sets me back is when we look at their balance sheet and we look at their cash and equivalents, you can see here that the total cash and equivalents is sitting at $108 million. This kind of worries me because in the short term, if they do have something that comes up unexpected, they may have difficulty in order to go ahead and actually take care of that. But if you take a look at their long-term assets, they've got more than enough money. It's just that they can't really take that money out right away. But overall, I do see this company growing year over year, and this is one of the companies that I'm looking to add to my portfolio next. And with NextEra Energy, you shouldn't be worried about their dividends because they've got a lot of potential in their dividend growth ahead. And currently they're expecting to expand their dividends by 5.6% at a 12 to 15% annual pace through at least 2024. And here are a few points why I'm looking to add NextEra Energy into my portfolio. Now, this company has 24 gigawatts of renewable energy capacity today. 16 gigawatts is of wind, which makes up about 67% of their portfolio. They've got 3 gigawatts of solar, which is 13% of their portfolio, and 3 gigawatts of nuclear, which is 11% of their portfolio. And if that wasn't good enough, they also signed a contract to build another 12 gigawatts of solar and wind in its backlog of work waiting to be completed. And NextEra Energy is moving aggressively into the energy storage space, which is a complementary renewable power technology. And with NextEra having a backlog of work to be completed, this is more than likely to keep driving the company's growth for many years to come. And just like that, that's the end of the video, and I hope you guys enjoyed today's video. If you did, make sure to drop a like if you haven't already, and also hit the subscribe button down below if you're not a part of the family yet. And just like that, I will see you guys on the next video.